Good evening, I'm Giuseppe Basile, I'm the analyst trader. You can find at the blog fibstalker.com. I I also post regularly on Twitter using the fibstalker nickname. Good evening, today is Sunday, December the 8th, and it's 8 p.m. Toronto time. And in this video, I'm going to review very quickly for you the daily and weekly charts for the pound versus US dollar, the Australian dollar versus US dollar, and the US dollar versus the Canadian dollar. So let's start from the pound. What you see on the screen is the daily chart of the pound, and those who follow me know that we have been modeling the price action in the last few weeks and months through this anchor and this extension long. As we can see, we had participation at the 158.46 to the pip actually, and the low was I think the low was here was actually what 58.53, so it was a little bit higher, and the first target was in this 164.55 area. Last week I assumed this area has been reached, and we saw some profit taking here. However, we know this is an extension, so there is the possibility for price to continue higher into the 167.70 level here. Now, if we get a correction on the other side, I think we are going to see a retrace, a 90% retrace of this price into the next level at 160.30, where program trading should have order long in the daily chart here. So this is according to the rules I use for trading, and my rules try to model what program trading is doing on all time frames, and this allows us to spot the footprints of algorithmic trading in the different time frames, and provides us with an edge, very important edge. Moving to the Australian dollar versus the Canadian dollar, I want to review first the weekly chart with you. And those who follow me know that at the moment I'm modeling the current move with this measured move. We saw participation on the lower side. This is also in line with the final target of the shorts I have on this chart, which is a long-term 0.85, and that's where I believe you're going to see price of this instrument in the coming weeks or months. And moving to the daily chart, then we can see that last week price actually responded very well to that level that I gave you, and it was traced as an extension from this anchor to the lows we had last week. And as we can see, there was this 091.61.62 level. It acted as a resistance because there were daily program trading was here with short orders here, with going short, and they were successful because although there was a bounce here, price then continued lower into this 090, which is the target, the first target I gave you, and this is an extension, so there was the possibility for price to come into 089.21, but that did not happen. So program trading as is its orders now at a lower level, and this level is actually represented by, I'm gonna throw this again, it's represented by the blue line of the next trace. And as you can see, there was already participation at the start of the Monday session, and this level is 091.28. so you're going to see if 091.61 holds, you're going to see price of this market kicking move lower into the next target, which is 089.22. So that's where we should see this market. Moving to the US dollar versus the Canadian dollar, I want to see the review the weekly here and show you that the first time in actually 2 years the highs we had in 2011 are being challenged here, which means that The measure move on the other side, the long term measure move here, long, is actually started working exactly at parity here, 10033 level, and that's what the potential now of bringing this price up to into 109 109.65. So apparently it looks like this market is going to become the Canadian dollar is going to become weaker compared to the US dollar. However, we still have to think that we are within this area of resistance, and until we don't move above 108.43, we still have to consider that there will be short participation on the short side here. But on the daily, of course, there is this move higher, and the sequence on the daily can be modeled with an extension higher, which actually brought price into the first target at 105.77. This was 2 weeks ago. We saw profit taking at the level, and then again the price was brought into 106.60, and so we now have to start thinking and modeling the next level of support if this market is going to keep moving in extension, and that level of support is 106.16. So we saw participation at that level, so we could see just a continuation higher into a higher price here. And I want to change the scale in order to show you where this market could continue higher, and let's see. This market has the potential, so I'm going to remove the previous setup, has the potential to continue higher into 107.49 and 108.18, very close to that level of failure that we have on the weekly chart. If we move below 105.95, then there is the possibility to go and test again this lower level here at 105.08. So that's the trading plan you have to keep in mind. If we go below 105.95, there will be this 20-day moving average could provide support initially, so have another bounce higher and then continuing lower. I hope this video is useful and helps you with your trading. What I'm trying to do here is apply my rules on that model program trading that I've been studying and deriving in the last 5 years. I'm a certified technical analyst, and I'm aligned to the International Federation of Technical Analysts as well. I do my own research. I published 6 research papers in the last 2 years, and I use my rules to spot the algorithm trading footprints on a price of major instruments. If you want to receive this video, please go to my website and subscribe to the free newsletter, and I'll be glad to send these videos to you at the end of every week. Thanks a lot for your attention. I wish you a very good remaining of this weekend coming to an end, and a great and safe trading week next week. Bye bye now.